Okay, cool. And obviously, if you have questions as we go, or if you're like, if you find that you're tuning out, I'll probably check in as we go and be like, do you want to go here or here next? But if you find you're tuning out or you have a question, just pop it in. Like, let me know. You can unmute and go, hey, 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 over here, because I might be like droning on for a minute, but hopefully I'll keep it interesting. So, oops, let's see. Let me just move my screen weird. Okay. Okay, so I kind of started out like I was like, let me keep this interesting, but I think I'll have to stand and sit. I was like, I couldn't get the setup with the camera quite right in my tiny space, but so I think we've established that we're probably in the right place here. If you're a business owner or someone who works like a business owner, is that all showing in the screen for you guys? Or do I need to, there we go, like that? Okay. I was like, wait, that moved.
Yeah, it looks, yeah, you're
Cool.
good.
Okay. If you're not excited by math or afraid of math or think math is hard, if you don't like looking at your numbers, sounds good, Catherine. But you wish that you could be good at doing the numbers. You want to be great at running your business. You'd like to have fun running your business, and you'd like your business to be easier and fund everything that you're doing. That's what we're talking about, is how to do that with the numbers. So what we're going to talk about is essentially what are financial statements. There's three main ones that usually matter to small businesses. And then we're going to talk about, like, what do they actually tell you? Where do those numbers come from at a high level? Why we need financial statements over just, say, looking at our bank statements. And then assuming if you're like Catherine, you have a bookkeeper and she does give you good financial statements, what do you do with them? Because a lot of times we think the first hurdle is getting the stuff into, say, QuickBooks and getting some financial stuff done. But then we're like, that's great, but it really didn't do anything for me. And I feel just as crappy because I don't really understand what it is. So we're kind of taking it to that next step of, why would you bother doing this other than so you can give it to your accountant to do your taxes? And I'll be talking, some mindset things, because I can talk and talk and talk. And that's why I said, interrupt me, because I can keep talking and I'm all excited and think it makes sense, but you're like, I don't get it. It's not going to work for me. And then the whole point of being here is lost. So we don't want to waste your time talking about things that don't matter to you or don't make sense. So please ask questions. And I don't know if everyone was here when we were talking about it, but there is a spreadsheet, and I'll be pulling that up and showing my screen on it. But you should have received a Google Doc link or Google Sheets link and an Excel spreadsheet. They're the exact same thing. So whichever one works for you, that's the one to use. They're both the same. Some people like Google, some people want Excel. Totally cool. And then I'm also going to just kind of talk candidly about what I see a lot of business owners do, what I've seen my clients do. And if you hear anything and you're triggered, like, oh my gosh, she sees me, she knows, oh my gosh, it's me, and you're embarrassed or you're ashamed or something that you're want to tune out. I'm not saying it to pull up those emotions. I'm saying it because we all do it. I don't enjoy my own accounting. But it helps you see oh, one, I'm not alone. Two, this is normal. And three, there is an answer and I can do this. And my mission is to make thousands of women millions of dollars, or, help the women. I'm not going to make the money for them, but I will help you make that money. And I think one of the most important things is getting comfortable with money. So that's why we're here. Okay, so financial statements. Oh, and I was laughing with Carrie. I like paper. It's just fun. And I'm like, who needs, what's it called? PowerPoint. It makes me fall asleep in a presentation. So you'll see me standing up, doing strange things. Hopefully that makes it a little more interesting. Okay, looks like that's showing up. Okay, so there's three basic financial statements, of which two we'll really talk about, and one will more talk about the concepts that matter from it. So those financial statements are the balance sheet, the profit and loss, and the cash flow. The balance sheet is essentially a snapshot of what you own and what you owe at a given point in time. Your system, like say you use QuickBooks or something fancier, you can click a button and spit that thing out. It's nice and easy. The reason that Priya, I was like, oh, wow, you look at balance sheets. Like if you're working in the automotive industry, you probably have a lot more robust things happening on a balance sheet. And just thinking too, I'm like, Lee's not here, but I'm guessing in a construction business, there's probably some element of inventory potentially, perhaps not. It just depends on how you structure things. But if you're totally a service-based business, you probably don't have a lot of inventory. So really all you have is cash on your balance sheet, and therefore it becomes somewhat irrelevant. But I'm still going to talk about it just enough to be like, here's what it is, here's why you would need it. It's usually kind of something like useful if you're going to apply for a loan, bring in a partner, or sell your business. That's where a balance sheet becomes useful to a smaller business. The profit and loss statement, often called the P&L or the income statement, or I think some people call it the statement of operations. If you hear any of those words, we're talking about this statement here. And that's the one that I think most of us have probably heard of, or someone has mentioned it, or an accountant has given us one. That's basically summarizing the activity in your business during a specific period of time. So like you would look at your P&L for the year ended December 31st, or for the month of August. And that's just all basically summarizing your revenue, your expenses, and shows you your profit or your income. And then the last statement is the cash flow statement. And it basically tells you, how did the cash change in my business? And I'm not going to go through the details of the cash flow statement because as far as I'm concerned, and this could just be my judgment, but I don't see anybody in a small business using a cash flow statement because an accountant prepares that, and it's not something you can just click a button and have a system spit out. It takes a little more thinking and like judging, and I don't see the purpose of it other than we'll talk about how cash flow matters and how to maybe like think about projecting it and managing it. Because as I'll say later, cash flow is probably the number one reason the businesses fail. But yet we focus on these things instead of talking about cash flow. So it's kind of a big deal, but I don't think the statement is where the value is. And then the other thing I want to talk, I always want to kind of address objections as I go. So a lot of people tell me, well, why do I need to bother with financial statements? I can look at my bank account, or I have this spreadsheet where I track all my expenses. It's getting the job done. But it's probably not telling you any sort of summary or stories or like giving you the full picture. So what I want to do is kind of help you see why your financial statements can be so much more valuable to you, because they will give you kind of a bigger picture so you can talk to other people about your business. Like you can say, well, how much do you spend on marketing? Oh, well, how much do you spend on photography? How much do you spend on this? And you don't have to say dollar amounts even. Like we'll talk about like, let's do this in percentages. So you can say, oh, I spend about 20% of my budget on this. And then, oh, okay, other real estate agents are spending 20% of their budget on marketing and getting these results. Maybe that's something I should do. That doesn't mean you should. It just gives you a data point to work with. But that's where having this can be so useful, instead of being like, well, I spend this much money on my website with Squarespace and I spend this much with this. Like, that's not as useful as like, I spend this much in total on this category. So that's where we're kind of going with the financial statement things. So hopefully I've sold you on financial statements being an exciting thing to talk about. So let's jump right in. Okay, so the profit and loss statement. The high level is it'll show you your revenue and costs. There's cost of goods sold and there's operating expenses. And then it shows you your gross margin and your net margin. So these are usually the words you hear people talk about. And I just want to kind of define them so that you have like, I don't know. I feel like one of the big things about accounting that shuts people down is jargon and feeling nervous. Like, I don't know what these words mean. And someone's just throwing these numbers around. So like a lot of people talk about, oh, I made $100,000. And you're like, what does that mean? I have that question because some people are talking about revenue. Some people are talking about what they paid themselves. Some people are talking about their net income, and some people are talking about their gross margin. And other people will tell you, oh yeah, I have I have 50% margins. I'm like, on this point or this point? So you really want to know, like, so many people have so much judgment about their own business because they hear other people say things. And then they're like, well, I must not be there. And then like shut down because they're like, well, is my business successful? I don't know. So if you know what the words mean, one, you will show up to conversations a little more confidently. And two, maybe you'll even ask questions like, tell me more. Is that this or this? And then people will be like, oh, actually, I don't know. That's what I usually find. Like I say it very friendly. I don't want to like make anyone feel bad, but I'm always curious. And then they're like, oh, I don't know. So it's kind of fascinating. But basically revenue comes from all of those invoices that you send out, all the cash that you collect. So like when you're looking at doing your actual accounting, all the transactions of cash coming in essentially would be your revenue. So if you are collecting in a lot of different places, you might want to know, and I make sure I capture all of those. Like if you have stuff coming in through Stripe, stuff from banks, stuff from checks, stuff in cash, you want to know that you're capturing all that information because sometimes we forget that we have money coming in from different sources. So it's good to remember all the cash is revenue. And then cost of goods sold is basically all of your direct expenses in your business. Different industries will use different words here. Like some places don't use this term. They just call it direct expenses or something. But it's basically, think of it as everything that you incur as an expense because you have a specific client or customer. Some people put it as, but for the customer, I would not incur this expense. So it could be like direct travel. It could be your time because you're the one directly serving your clients. It could be specific software that you buy to service the client, things like that. And then you have your gross margin. And actually, because I don't know if this will go out to other people at some point, but if you have a brick and mortar business or a retail business type of setup, and actually this would work for you too, Priya, if it's like manufacturing wise, either way, whether it's buying stuff to sell or if it's manufacturing things to sell, that's where you generally see COGS. And then you get to the point, okay, what's our gross margin? And that's a really important point there to be like, okay, most businesses need to have at least a 50% gross margin, meaning we spend half of our revenue on this line to cover the rest. Like usually that means we're at a good place. Now that can vary drastically. Like I know people who have a 50% margin at this level. So, they are probably like 70% here. It really varies. And it depends on like, is it you by yourself? Do you have a lot of people? All that. So don't take my 50% as hard and fast. Just take it as it's a number that's out there. And then I go and find which one works for me.
Sarah, can I ask you, so the cost of goods sold, does that include like my consultants who are working for me? That's where that.
If they're working directly on, if you hired them to do client work specifically, that would go here. Okay. And if you pull out like a lot of us, I feel like probably don't look at our financials as often as I'm telling you should. But if you look at like your tax return, they'll have a COGS line. The tax return always has a COGS line for your business, whether that's a Schedule F or Schedule C, or I think Schedule F is farms. Schedule C is for the regular business owners. I used to have a farm, so I'm like, wait, why am I saying Schedule F? But you never know. Or if you're a different, like, what I'm saying, a corporation, you would have like a different form that you fill out totally. But COGS would be a line that you'd see on there.
So that would also include like like the software I use, that includes that too.
Yeah, especially if it's software for the clients. Like if it's like scheduling software or something that you would have, like the operating expenses would be, if I have one client or if I have 500 clients, I would still have the same expense.
Okay.
But if it's something that's in the direct service of the client, like if you're creating a website for the client and you pay $500 for their Squarespace site and you pass that through to them, that would go up here.
Okay, so operating. Okay, gotcha. Thank you so much.
Mm-hmm. And the even higher level, it doesn't really matter if you put it in one or the other. Like it's not going to make or break things. I think of it more like what works for you. Like let's say you get audited, you probably you're like, I claimed the expense. It doesn't matter where I put it. Some people are very particular, but I always say like most of the financial statement stuff is for you as the business owner and making sense of it. Like, how can I make better decisions where, like, looking at my numbers? So do not lose sleep over
where things go. Okay.
Yeah. As long as you know this is an expense and this is revenue and I tracked it all, is sometimes all you really need.
Okay,
So yeah, nothing I'm saying is like hard and fast and going to make or break anything.
okay.
So I think that's always important to remember.
Is there, you put,
oh,
like application cost under cost of goods? That's
Oh.
okay.
wait, can you, I missed the very beginning, sorry.
If we put like our application costs, like for example, like Microsoft Office that
Oh,
we
mhm.
buy for our business or something, to just, you know, streamlining to the smallest part. If we use that, but that's used on an everyday business across multiple projects, and then you put it under cost of goods, but not under your operating, because that technically is operating expense, right?
That I would put under operating because you're going to use it for so many things.
Yeah.
Yeah. So like, is your business, are you in manufacturing or are you in sales? Okay. Yeah. So manufacturing, a lot of times you'll have some direct costs, then you have a bunch of overhead things, and then you'll like have an allocation of different overheads.
Mhm.
Sometimes it's called G&A, sometimes it's called overhead or operating. There's like different names that they'll come up with. And you would allocate like this department, depending on how big of a thing you're doing. You may say, here's the bucket of overhead, and we'll allocate a percentage to different departments. And it would be handled that way so that you don't have to try to assign like Microsoft to individual projects or something.
Okay.
I'm guessing. I'm like, I used to work in a lot of government contractors, and that I saw that a lot in there. So which was service-based, but they had the allocation thing going. And
Yeah, that's like some of our licenses that we do get for like applications. We put it under our operating expense, and then we have this hypothetical formula that
yes.
divides it up between all of the divisions that we have and the departments.
Mhm.
So is that the right way? We've been doing it for years. Nobody's
Yes.
correcting it. So I'm like, okay. But if it goes
Yeah.
deep into the cost of goods, then
Yeah. No, the difference is like a lot of smaller businesses will buy or pay for a thing specifically for a specific client, and they have no other use for it other than they bought it for that client. And then that makes sense to put in there.
okay, clear.
Yeah, totally. Like this is the fun thing about accounting. It can be so drastically different for different industries, different individuals, different businesses specifically. It really depends. And that's why it's great to ask questions and not think that we should know better, because why would we know? We're not trained accountants. I mean, some of us are, and even then I still ask questions. I've been out for a while. Okay, so I think we've kind of covered, I'm like just looking through my notes if there's anything I missed. Okay, so now I want to just give you guys kind of a visual to help make what these financials mean, and then we'll jump back into the balance sheet. But okay, it's art class time. So think of a tree or any kind of plant. And if you're looking at the pieces of it, the balance sheet, which we'll talk about in just a minute, is kind of like the trunk of the tree and the roots. It's like the healthy, like you judge the health of a tree based on, is this stuff working? So sometimes you can have stuff happening up here, but this stuff's basically dead. And so like, where would this be next year? Like this could be your last harvest kind of thing. And up here, the P&L is like the apples on the tree, the fruit. So you will harvest the P&L, and that's why it's for a period of time. Like you think like trees grow, they produce something, and then it dies at the end of the season, and then it comes back. The healthy balance sheet sustains that coming over and over year after year. The P&L is the harvest that you take out for a certain period, and you're like, yep, in this year we did this thing. And then cash is the water that flows through and feeds everything. And that's why it's so important to pay attention to cash, because sometimes you can look really good on your P&L, but have a really bad balance sheet and no cash. And that's why banks usually ask for the other financial statements, because they're like, yeah, this P&L is really nice. You got a lot of revenue, but that doesn't mean anything about what's going to happen next year. And that's what an investor or a bank or somebody buying your company would be looking at. And that's also probably why on a day-to-day basis, we don't look at it, because we're like, listen, I'm making some cash here and I need to pay my bills, and that's all I'm paying attention to. But it's good to kind of pull out and be like, okay, here's why all this other stuff is out there. And then back to the balance sheet. So I wrote a really, really simple balance sheet. So Priya's gonna be like, that's not what my balance sheet looks like. But we can talk about it if you've got questions, Priya. So balance sheet is basically, it shows you your assets. That's the things you own that can be converted into revenue. And it shows you your liabilities. That's the things that you owe that you're probably spending money on to create assets or to create revenue. And equity, which is basically just like what you own in the business, your investment. I usually, for the most part, like equity is kind of like, don't even worry about it, other than to know there is a formula called assets equals liabilities plus equity. And that's what we call a balance sheet, because these two numbers balance. Assets always has to equal liabilities plus equity. If you're clicking a button on QuickBooks or whatever accounting system, most likely this is going to balance. It's if you're doing it by hand or if something has gone wrong in your system, which QuickBooks is a good one for things to go wrong in, because you can kind of screw around with things and get things to go off. But in general, these are not things that you need to worry about on an everyday basis in your business. It's more just, this is what it is. If you need it, it's out there. But it like a small business will probably, cash would be the main thing that you'll see on there because you have a bank account. Sometimes you might see, and it is a snapshot. So like you would generally do this, say, at the end of a month or at the end of a year. I would never suggest that you run a balance sheet on September 12th. Like that's just like not a logical. I mean, it's all arbitrary anyway, these times, but I'm like, the 12th makes no sense to my brain. The 30th would be much smarter. Only because I've been trained to think that, I suppose. But cash, accounts receivable, like if you sent out invoices and haven't collected them yet. Inventory, so like Priya would probably definitely see inventory on there. And then there's different degrees and types of inventory. And then property, or a lot of times it's called fixed assets. That'd be like if you own a place or you rent an office and you have furniture or you have fixtures, if you have a factory, things like that. If you're a real estate agent, I'm thinking you probably only have cash. Maybe you have a signed deal, like at the end of the year, you might be like, well, I've signed these deals and they're going to close in January. There's a chance, but my guess is you're probably still cash based, and there wouldn't be a reason to put that. You just know that money's coming, but you don't actually have title to it yet. So it wouldn't go on your balance sheet. And if I'm using words and you guys are like, Sarah, I'm falling asleep, I was like, oh, I just said the word title. Like, we should not say that. That's probably really boring. Liabilities, most often, like you might see an accounts payable, like if you have bills that are in the system but not paid. For most small businesses, that does not happen much. Like there's no point. You're just going to pay it right away. Don't enter it. Or you might have, like, if you get a loan from the bank, or if you have your credit cards and you have an outstanding balance on the credit card for your business, that would be all I would expect to see there. Any questions so far? I'm like, wait, I have not asked for questions. Okay. So that's all I really think we need to go over on the balance sheet. Like I said, like, I guess what you would look for, like the health of your business would be like, do I have enough cash to carry my business through X amount of time? And that can be very arbitrary as well. Like, what's your cycle of kind of like, when do my clients pay me? How often do I collect? When are my bills due? Kind of paying attention to that. I would say, 3 to 6 months of a cash reserve would be amazing and awesome. Do we all have that? Probably not. Is that a nice goal to set? Sure. Because when you do have a cash reserve in your business, like a larger company might look at having that reserve be in their equity. We don't need to worry about that. But when you have some kind of reserve, it just makes your life easier, because you're like, oh, I can weather any storm in my business. So like, that's something that really came up a lot for people I was working with as the pandemic hit. Nobody had cash reserves. They had no backup plan. They were like, oh crap, what do I do? And that's where like the different PPP loans and different things really helped a lot of people out. It's because we didn't have that set up. And I think it really helped a lot of people kind of like pay attention to their financials more. Like that was what I was doing for half of 2020, was helping people figure this stuff out who had never paid attention to it. So that's another reason to kind of pay attention to it, because then you're more prepared for things that come your way.
Okay. Oh, can I ask you a question?
Yes,
Sorry.
please.
Willie just so if you have a home office, does anything still count as fixed assets, or is that just an audit me thing?
I would talk to your accountant for sure on that one, because one, I am not very well versed in the home office stuff. I just decide I'm not going to deal with any of it because I don't want to. That does not mean I shouldn't. There's very specific rules about the home office. So yes, it can be a fixed asset. Like it definitely could be. Sometimes things are more expenses or taking like a piece out. Like usually if you have a home office, you're like claiming some kind of depreciation, and there's like little complexities that may not be in your balance sheet, but maybe in something that your tax accountant is tracking separately. So I would say definitely ask your accountant, because it's a very valid expense. It's something you definitely want to take. I just don't know enough about it to give you like really useful advice on that. But yeah, it's not a dumb question to ask. I just don't have the answer. So do ask, please. Hopefully that's sort of helpful. But yeah, so yeah, if you like I have a desk, I have a laptop, I have a ring light, I have this easel thing. In my mind, a lot of those are very low dollars. So I consider them immaterial and not worth capitalizing, because if you put them as fixed assets, then for tax purposes, you like depreciate them, and for book purposes. Meaning if you spent $1,000 on this stuff and it's got a 3-year life, you would take a third of the expense each year for 3 years as a deduction, as opposed to just deducting the entire $1,000 in the year you spent the cash. And if you're making $100,000, I'm like $1,000, let's just deduct that and be done. But that's how I choose to do my taxes. Other people may tell you something different. Like there is a concept of materiality, and that's why sometimes I'm like, it doesn't matter. Some people are like, I have to do my books to the penny, and others are like, listen, like, I really hope that you don't get an auditor. There should not be an auditor that's like, I don't know, $5, we're gonna like go to town on it. Like that just shouldn't happen. And I will also say, like, when I started in accounting, I was a financial statement auditor, and I audited a company. I think it had a $6 billion loss one of the years. So our materiality threshold for what we would not even worry about looking at was $1 million. And we used to laugh. We're like, what's $1 million between friends? It's a rounding error. And so it kind of warped my mind, but it really helped me with like money mindset and like just grasping different levels. And so I did go to my next client and I was like, yeah, this looks great. And then they reviewed it and they were like, Sarah, there's like millions of dollars of difference here. I was like, isn't that rounding? Oops. I was very young and very dumb at the time, but it just kind of puts things into perspective to be like, oh, there's so many different levels. Like we just figure it out for ourselves and decide what we want. Okay. So a little bit more on cash, just because it is so important. So I think I said earlier that of the businesses that fail, cash is the reason why. Literally 80% of business failures are due to poor cash flow. And when do we talk about how to manage it? Even like when I look for guidance, I'm like, there's not a lot of useful stuff out there. So I want to just talk briefly about cash, just so that like we have it in our minds. And if you did want to do a cash flow statement, it's essentially showing you your sources and uses of cash. So like, how does cash flow in or come into my business? And how does cash go out of my business? So cash comes in through things like revenue when you collect from a client. If you go get a new loan from the bank, cash comes in. That is not revenue. I have had a lot of clients call it revenue. I'm like, no, it's not. You got to repay that stuff. No, not revenue, but in a good way, that you don't want to pay taxes on that cash. Like that's not revenue. So that's actually where the balance sheet stuff is kind of interesting too, because like that's money coming in and money going out all on the balance sheet and never showing up on your P&L. don't worry if you're like, what is she talking about? It just helps explain why, like, you see stuff in the media and you're like, how did they do that? How did nobody know about that? Or how did this slip? It's because of stuff that is it happening on the income statement or the balance sheet, and like where our attention is drawn. So just know that a loan is cash coming in. Or if you get a new investor or you bring someone in as a partner, they might buy in, if you've heard of that. Like they would give you cash in exchange for being part of your business. And then uses of cash, cash going out. So like revenues are most common, expenses are most common money going out. If you're investing in something like Priya's company might be like, let's do a whole, a new equipment or a new building to put a new factory realm in, or a new product that we're building, you would invest in that. So you put a bunch of cash into that, build the thing, and then eventually it would start actually producing cash for you. But at first it's a use of cash that will later become a source when you sell the things that you make there. When you repay a loan, that's another use of cash. Or when you make distributions to the owner. So like if you pay yourself, if you pay yourself as an employee, you're an expense. But if you are paying yourself out of your profits, or like at the end of the year, you're like, oh, sweet, we have money left over, I'm going to distribute that to myself. That's what that is. And I was like, Sarah, don't go there. But I will just say, depending on the way your business is organized, you may be an expense, you may be all distributions. It just depends on how you've organized your business as a tax entity. And that is something to definitely talk to your accountant about, like distributions. If you are an LLC, all of the distributions to you are treated as profit to you and taxed fully as self-employment income. But if you switch to other entities like an S corporation, you can be an employee. So like if you're paying yourself through payroll, you're doing smart things and you are getting a benefit of only the stuff you pay as payroll being subject to self-employment income, which is like 15.3%. So I will say people like me who operate as an LLC in the past in my other businesses, I've been surprised at the end of the year by my taxes. And that's why we talk about these things, because I was like, oh, there's this self-employment tax thing. Whoops. So it's really important to know, because you can save yourself quite a bit of money that way. The details of that, I'm looking for my own accountant to talk about that with. So I cannot tell you the nuances of doing it or when you should do it. Just know that it is out there and something to talk to someone about when you want to do it. The reasons, I guess, I was like, how did I want to phrase it? The three most common ways that we end up with our cash flow problems are kind of three things that happen. Two of them are very closely related. One is we spend money in our business without planning. So like, we're just like, that's a cool, like, I want new business cards, or I really would like a new website, or she's doing that, I should do that. That kind of spending. That was me in my store. I had a store and I was like, I need inventory to look legit. So I way overbought and then I couldn't sell it. And then I had a cash flow problem. And so it's very common. Another thing that's related is we try to solve problems with money instead of our brains first. And I don't mean we're just being stupid. What I mean is we're like eliminating our creativity and being like this is a problem for a lot of companies, like who start out with a lot of money in their pockets, but don't have a plan. You're like, oh, I can just solve that by hiring someone. And then you run out of cash because you didn't actually decide how you wanted to solve, and then you're mad at them, and you're probably worse off than you were because you didn't use your brain first. And then the other one, which is so common, is timely collections. Like, how long does it take you to invoice your clients? When do they actually pay? When do you have to pay your people? So especially like when you're managing employees and contractors, like you got to pay them, but maybe your clients aren't paying you. So it's always important to like be upfront. What are the terms of the deal? Yes, I should invoice. And so much of that a lot of times is like an emotional thing of, I don't feel worthy of charging and collecting. And I just hear those a lot. And how do you manage the cash? Mostly just pay attention to it. Like create a budget, look at your actual numbers, see where they fall out. and just kind of keep an eye on like, oh, do I have cash in the bank? And look at the timing of when do I expect to collect? When will this be this? And so on and so on. And that's really all it is. It's just, it sounds fancier than that when people talk about it. Okay, so I'm looking at the time and going, oh, okay, I should be wrapping it up. I got a little excited. So I'm like, how useful is it to you guys to walk through financial statements analysis, like to open up that spreadsheet and have me like walk through and be like, here's what you should do with the balance sheet and the income statement? I'll pull it up and then I'll just see what questions you have. That might actually be the easiest. Where did it go? All right, can you guys see the balance sheet? Okay, cool. I wasn't sure I never know what actually shows. Okay, so this is just what a balance sheet coming out of your system might look like. And it usually you want to do a balance sheet, like you usually see 2 periods. So like Tracy, you said you've had 2 years in business. So you'd probably see like 2021, 2020, or maybe like 2021 and year to date 22. But it gives you kind of a point to say like, oh, here's where I was last year. Here's where I am now. Isn't that interesting? I don't generally do a ton of analysis on the balance sheet because, I mean, yeah, like why did cash increase from 2,000 to 5,000? I don't know. I deposited some cash. Like for a lot of us, there's just really not a lot of exciting stuff here, but I just wanted to include it so you had it as a visual. And then I just put in a P&L, a profit and loss statement, just so you could see kind of some samples. Can you see where I'm highlighting? Does that show up? Okay. So for yourself, like create whatever works for you. Like I put in services, products, and other, just trying to guess like what might be possible things people might have. If you're like Priya's business, you probably have very specific categories of revenue, like parts, finished vehicles, refurbished things. I don't know. I'm just trying to think of potential samples. And you might want to track those specifically. Willie might want to track her different types of photography, like the lifestyle stuff, the business stuff, the family stuff, however she breaks that down, because it might be useful to be like, oh, I really enjoy the business photography, but like most of my money came from these family shoots. Maybe I should look at what my marketing is and see if I want to shift something. And then you can also do the same thing with your COGS. You can track by the same categories, or you can lump it all together. It's really up to you. When I had my store, I thought it was useful, not always easy. Like there is a cost benefit. Like, is it worth my time to track these things separately? Or is it really not useful information that it won't change how I make my decisions? I think that's a really important point when you're looking at accounting. Like, does it even matter to my decision-making process? Because if it doesn't, don't even bother with it. Yeah, it might matter like in another year or 2 years, depending on where you want to go. But if it doesn't matter right now and you aren't like using it, don't worry about it. And then I just included some kind of common categories of expenses that you might see in the operating expenses. And again, organize them how you want. Maybe you want to just lump a bunch of things together. Maybe you like seeing even more detail. Totally up to you as the business owner. And then I have this P&L with analysis page. So this is where the analysis comes in. And it's essentially like we talked about, what is your gross profit? And gross profit really, so there's the dollar amount. Gross margin or gross profit really just means revenue minus direct or COGS expenses. And then if you want to get the percentage, all you're doing is taking that $65,000 here divided by the $105,000 of revenue. And that's where you get that percentage. So when you're like, I have a 60% margin, that's what we're talking about. And then the other analysis can be taking each of your expense categories down here in the operating expenses and just dividing them by revenue. So like I spend 5.7% of my revenue on rent. I spend almost 12% of my revenue on employee payroll. I completely made these numbers up. But if you run this out of your system and you did this little exercise, it could give you some insightful stuff. Like, you know, if somebody says, oh, you should always spend 30% of your budget on marketing, and you go, whoa, I only spent 1% of my budget on marketing. Maybe I should change it. Like, do you like the results you're getting with spending 1% on marketing, or would you like to try 30%? I might not jump from 1 to 30. I might test your marketing, but it gives you places to kind of look. And that's kind of the point, is like doing this and just even looking at these numbers helps you decide what you would like to do differently. It helps you kind of see like what might actually be a problem that's worth my time, as opposed to just freaking out and be like, numbers. It helps you just go somewhere with something. Yeah, I was gonna say, Catherine, I see you unmuted.
No, I was gonna say, Willie has another question.
Oh, cool.
She's
I love that
asking,
Will's listening, but can't talk.
is direct labor included in COGS? That's what she's asking.
I would include direct labor. Yeah. So like if you're hiring an assistant and all she does is go to shoots with you, I would put her in COGS. If you're thinking about your time, you could split yourself up and be like, I spend 80% of my time going to shoots and being with clients, doing specific in editing and whatever. And I spend 20% of my time on sales calls, doing my invoicing, that kind of stuff. That piece would go in your operating. Again, if you don't want to like think about like, do you need to start keeping a timesheet and decide for sure that you're 80 and 20? No, just put yourself all in one category and keep your life simple.
Okay.
No one's coming after you.
And she has another question.
Okay.
She said, can I pay myself different rates depending on the job I'm doing?
Ooh, I think yes. If you're talking about doing that on a payroll basis, I would run that by your accountant or your payroll person, probably your accountant. I don't know how much a payroll person truly knows, depending on who you're using or what you're doing. There are rules. So like basically the IRS has rules about like reasonable compensation for owners. And I think it would make sense to pay yourself less for some tasks and more for other tasks. And that might actually fit really well with them, or just come up with like a general idea. And it may be more like you want to budget for yourself at different pay rates, but pay yourself one rate. It just depends. Like I would totally ask your accountant, and then depending on what he or she says, go from there. What makes your life easier?
Okay, Willie, if you're listening right now, you're giving me a headache. It's really
Like, don't ask these
complicated.
questions. Yeah, I feel like for a management
It
purpose,
just seems so complicated.
I definitely think like when I'm coaching someone on how to use their time, I tell them, okay, what are your $5 an hour, $20 an hour, and $500 an hour tasks? And I do have you break it down that way. I wouldn't tell you like you have to go pay yourself different things, but like your marketing time and your client service time are your high dollar value things. Your sitting around and invoicing and chasing things down and listening to podcasts because you're nervous and trying to like learn something that you think you should know better, those kinds of things, hire someone to do that.
Yeah.
Things you hate doing.
That seems, well, that's kind of, again, that's why I hire somebody for the numbers, because I just know this is just not my strength. So, yeah.
Which is totally cool. And I guess I should say that with a caveat, like hire someone that makes sense. And also sometimes we aren't really ready. Like I had a coach before I made much money that was like, oh, you should just hire a housekeeper and hire someone to do this and hire someone to do that because your time's so much more valuable. I'm like, yes, but cash flow, I don't have cash to pay all these people and me, and I don't know how to solve my problems yet. So I was like, there's a balance of like, figure out what you want solved, spend the month. Like sometimes we have time, sometimes we have money, but it does help to break that down and see like, where's the value that I'm creating? Like, is this a valuable task for me? Accounting, I would say always hire that out unless you really enjoy it, but
Yeah.
don't give the responsibility out. Like you still got to review this stuff.
Right, right.
So what I do to analyze or evaluate my financials is like doing this, but then also like comparing period to period and budget to actual. And those are like the basic things. And I have a whole like thing prepared, but it's like really like all this crap that I'm talking about is maybe 5 hours a month, maybe 1 hour a month, really depending on what's happening in your business. Like Like if you can look at this and just see like, oh, I'm spending a lot of money on marketing and a lot of money, or actually not that much on marketing, a lot on employees and a little bit on rent. Do I like where those are? Do they make sense? Is it more or less than last month? And then looking at things like, okay, my revenue's at 85. I wish it was at 120. What could get me there? Do I need to do more marketing? Do I need to sell better? Do I need to spend money or do I need to change what's going on in my business? This is just kind of a starting point to help you start asking those questions. So it's not like, oh, I just look at the numbers and they tell me all the answers, but they do trigger the questions. And I'll just, before we shut this part off, I'll just jump over to this budget sample. This is essentially just the P&L, same format down on the left side of the screen here. And then I just broke out every single month. And so like, this is actually what I use for everything I do. Like I have QuickBooks and that's where I officially track things, but I create my budget here and I use it as kind of my like summary. So like, I don't put in decimals or anything. I'm like, oh, I spent about $1,000 on this and about 500 on that. And I try to put it on like where I expect the expense to happen so that I can kind of anticipate when will I need the cash for that? When will this cash be coming in? So this is kind of my cash flow tool, kind of my, am I hitting my targets tool? And like, so when I say do budget to actual, like, okay, in January, I had this plan. What actually happened in January? Run that report in QuickBooks. How do they look? It could take you 5 minutes to be like, bloop, 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 numbers look fine and move on. Or you could be like, oh crap, like I didn't make any money in January. What's going on? I thought I was going to make $8,000 and then analyze that. Like, oh yeah, I took December totally off. Nobody even knew I was here.
Yeah, because that's the point like I don't want to get to is that it looks like I'm making more money, but I had to outsource more. So technically I'm like doing more work for the same amount of money I was making before I took, like I'm with you, Sarah. Like I have had colleagues who are like, I billed $50,000 last month. And I'm like, yeah, but you outsource everything. What does that mean? It doesn't,
Yeah,
so how much are you actually making? That doesn't mean anything to me.
exactly.
So yeah.
Yeah.
And
And
frankly, I find
another,
that when people share that, it's really tacky anyway. So.
I mean, I like to hear numbers because it gives me something to think about. But yeah, I
Right.
have a lot of those thoughts too, where I'm like, but what does that really mean? Why are you
Yeah.
telling me that?
Yeah.
And so I'm in a mastermind right now where we share our revenue once a month. And we share like, let's see, what is it? Year to date cash, last rolling 12 months cash. And then I think there's one other figure that we share. And at first I was like, oh my God, I don't want anyone to know. Then I started reading everyone's numbers and there's like almost 200 of us in this group.
Wow.
And it was really helpful to do that process. Like, I don't want to go out and tell all my friends what I make and hear what they make.
Right.
But hearing people in a similar industry to you and sharing those numbers
Yeah.
helps to normalize like, hey, you know what? These numbers are just numbers. And then we also celebrate when people make a lot. Like if you make $200,000 in 12 months, you get up on stage and you get a little award.
Mm.
And it is only 200,000 of revenue. So no one cares what your profit is. We don't talk profit in there, unfortunately. But we're celebrating women making cash, which is really cool. And like, there's like this genuine, like, it's cool when women make money air to the room that I really appreciate. And I feel like that's part of why I love talking about this stuff. Like, I don't even tell people I'm a financial like this is just like an added bonus of stuff that I do with people now, this class kind of thing. But I'm like, but it's so important because it just kind of like brings us normal stuff, which is why I love this stuff. I'm going to, did anyone have questions anywhere on this before I stop the share? Okay, cool. Okay, so everybody's back.
Ooh, I'm in the dark.
Oh.
It's me. I'm like,
Oh, okay. I was like, what happened?
sun went down. I don't have my lights on. So.
Got it. Yeah, I was like, oh, the sun is going to go down. I love calls when like things change while you're on the phone. Okay, so I'm going to just kind of rush through what I have left and then open it up for questions just so we can have a quick conversation about things. Okay. So I was saying like you can do your financial statement management in just a few hours a month. And really what that means is, like, if you have your accountant or your bookkeeper, all you're really doing is checking. Like, does she have everything included? Did I forget to tell her about something? Does everything make sense? Do I like where it is? Cool. Check. Next. Whoa, my screen just went blurry. Can you guys see okay? Okay. I was like, everything went weird in Zoom. Um, or maybe it's my eyes. Now everything's like blipping. Okay, if I go insane, something's going on here. And it doesn't have to be fancy. Like, oh, okay. So record transactions, make sure everything's recorded. Then you want to create the financial statements, which can be clicking a button, or somebody might send them to you. Like, I have a lot of clients who are like, yeah, my accountant sends me these statements, but I don't do anything. This is what you do with them, what we just talked about. Then you go through and you just kind of review and evaluate, ask your questions. And I'm going to give you some kind of questions and things to ask as you're reviewing to kind of help that process. And then you just update your budget if you want to. You're like, okay, did I like where it is? Do I want to change something? What can I update for next month, etc. And really the whole point is, the more you do this, the easier it gets. And the more valuable your business is, the more valuable your brain is, the more you're going to believe in yourself as a CEO. So it's not even, sometimes it's like, okay, that I don't really know what happened, but just the iteration of doing it, you're like, oh, numbers are getting easier. My numbers feel like something to me. Like, I can be Willie at a meeting and ask pointed questions that sound intelligent, like, and trust yourself to do that. Willie wasn't born knowing all that, probably, which means we can all learn to be like that. Okay, so I kind of just touched on this, but really, like, why do we want to do this? And it's because looking at financial statements, looking at your numbers, and not just looking at transactions or thinking like wishful thinking or avoidance thinking or drama and doom thinking, just reduces drama. It's like, oh, let's just look at the numbers. They're numbers. They're not meaningful about me as a human. They're only here to tell me about my business. Because high emotions cause low intelligence. Meaning, if you're like all like excited about making revenue or depressed about having too many expenses, your brain is going to go to panic instead of problem solving. And like, even when things are working, like, you really want to go to, why did it work so well? Not just, yeah, it's a fluke, and then crash the next day. You're like, no, I created that. Now, how did I create that? This is awesome. And like I said, practicing it, looking at it over and over, you start to find, like, where are the actual problems and what are the actual solutions. You get your brain trained in a better way. And it really helps you separate personal value from business value, because a lot of us, I don't know if it's a woman thing or if it's a small business thing, but we think if our business is working or not working, it's because of who we are and what people think about us, as opposed to the value we're putting into the world. And I think that's an important distinction. Like when you hear people like, charge your worth. Well, yes, like, you probably do need to up your prices if you're a woman. Like, that's just a general, like, we should start there. You're probably not charging enough. And then the next step is, well, is your business actually generating value for people? And if it's, I don't say that in a like judge yourself way, but in a, oh, let me solve for the things that actually work. Like, yes, I should put more money into this, or not money, some effort into this, because the more value I put into the world, the more people come to me, the more I, of course, should get paid. That kind of thinking. And just build your concept as the CEO of your business. Like, I'm a legitimate business owner. I get my numbers. I look at them. And the more I look at them and study my business, the better I get, the better my business gets, the more capable I am, and the more possibilities open up to me. So there's kind of my mindset piece on this. Okay. And then we kind of talked about this, but just, budget to actual, like, here's what you actually are looking at when you go to do any sort of evaluation. So, like, what did I think would happen? What actually happened? Do I like the results? Do I know why it happened? Sometimes we don't know. Sometimes it truly is a guess, and that's okay. Like, we can't predict, we don't know everything, but we can at least guess and test and move forward. Looking at last month to this month, or last year to this year, always useful to see, like, am I growing? Am I changing? Have I improved the things that I wanted to improve on? Yes, no, let's figure that out. And why were they the same or different? Like we used to have to do an analysis. It was always, we'd look at the P&L and be like, well, this changed because we started putting out more proposals, and this changed because we got better at our sales, or, there's a lot of different reasons you can come up with, and they might be pulled out of your ass, who knows, but you can at least guess at it and then test that theory. Always look for trends. Like, is something increasing, decreasing? Is this a good thing? Is this a bad thing? Update your goals and always celebrate. That's something I'm terrible at, but celebrate one that you might have, like, maybe had a win, but also celebrate that you're just learning. Like, maybe one win is simply, I sat down and did my numbers. I showed up for this class that sounded really boring and was really boring, but I lived through it. But questions you might want to ask. And I'm just going to go to my notes because I wrote a lot more in my notes. Essentially, you want to start like, what's working well? What went well? What do I like? And why is it working? What isn't working and why? And what can I do differently next month, next quarter, next year? You can use your financials to do things like, how should I price my stuff? Should I hire someone yet? Should I stop hiring people? It can really help you see like, oh, like Catherine, like you said, like, I'm hiring all these people, but now my margins are really low. Do I like that? Well, I like it because I don't have to work as often. Maybe that is a good thing. Could I increase the revenue with that so that I can get my margins up? Or do I just need to get more people doing more work so that the margin cash supports me? And that might be the answer. But it's kind of like, if you don't look at it, you'll never get to that point of problem solving at that level. Let's see. Yeah. When should I hire someone? What can I pay them? Should I stop hiring them? Do I need a loan? Like, do I have enough cash to make it through X period? Or like, say you're planning a vacation, you might be able to look at things like, okay, when are these payments coming in? If I check out, does revenue stop or does revenue keep going? Like, is my business totally waiting on me, or can it live without me? Then you can balance that kind of stuff out. Simply, am I profitable, and how much or how much not? Do my expenses make sense for my business, for my goals, for the revenue I'm bringing in? Like, that was me in my store. My expenses made no sense. And I had a very strong story that I was just never going to succeed, because how could anyone succeed with this rent being so high? And I had a very hard time with that. I had a coach. She walked me through it. She was really good at numbers, and it was still very hard for me, even though I understood the numbers. So there's a lot of emotion in there too. And then just like in general, like, what's my cash flow doing? Yeah. So like, when you ask these questions, you start to learn how to find those answers in the financials. So that's that's basically it, except you guys are ready for just one more concept. I just want to talk at like a really high level about how most of us approach our business and how you could do it instead to create better results, I guess, or more results of what you want. So like, most of us go and we're like, let's see how much revenue I can make, which is totally cool. And they're like, well, I'll just spend some money and we'll figure it out and, get stuff done. And we think profit is just the leftover piece. We're like, well, that's just what was left. I can't control it. And then sometimes you're like me and you get surprised by the taxes that come from a profit that you weren't sure you were going to have or not have. And that's the way most of us are taught. When you look at a financial statement, that's what it shows. So why would we do anything different? Because you have control. That's why. So the alternative, I guess, to make this effective is, one, you've got to believe this is possible for you, but two, you just want to put it into practice. So let's flip it around. And what if you started with, how much money do I want to make? And like, this is why when we talk about like, what levels are people talking about? Let's just start with, I'd like to take home $80,000 in cash for me, whether that's through payroll or distributions or whatever. Don't worry about that right now, but I want to take home 80K. If you set that as a goal, and then you say, okay, cool, how much revenue do I think I can make? Like, let me just think, like, what would be a very attainable number? Especially if you've been in business for a few years, you probably know, like, with what I do right now, I can guarantee I'll make this much revenue. So then if you take that revenue minus that profit, that tells you how much money you have to work with. Then you might say, okay, there's some certain expenses that I absolutely have to have in my business. Like I have to have marketing, I have to have my bookkeeper, I have to have the, like whatever the priority expenses are that you know you want to spend for sure. You go ahead and budget for those too. And then I used to put like 25 to 30% as the profit, but, or actually I think I might have done that as revenue. But if you just plan whatever my profit is, I'm just going to plan for setting aside 40% of that for taxes. And so you take that revenue that you're pretty sure you could do, take out your profit, you take out the expenses you know you want to spend. Thanks, Tracy.
Thank you.
Yeah, I'm glad you could come. And then you take out the taxes that you think you might owe. You leave yourself 8K in this example of expenses for everything else. And like, trust me, when I went through this for my own numbers, I was like, I got negative numbers here. The first time I was like, well, shit, something's got to change. So but it makes you get creative when you go this way. You're like, okay, my priority is this thing. This is what I know I can do. Let's see what I can do with these numbers. Instead of just taking the leftovers as what you get. It's not even like you have to stick to this, but if you just kind of push your brain to do something like this more often, it gets you creative and it just makes you solve the problems in a different way. So I just wanted to share that because I was like, has really been helpful to me to do this because it really changed like how I prioritize things, how I thought about expenses, how I did all the things.
Can you send that to us like when this is
Yeah.
done? That's really neat. I like that.
Yeah, definitely. So that is everything I had prepared.
That's very good.